Good evening, friends. Welcome, welcome, welcome. Welcome to this weekly edition of Thunder Thursdays. I'm your host and host, Dr. Bhavdeep Ahuja, coming before you every week. And I am presenting to you Thunder Thursdays every Thursday on the topic of finance for doctors, finance for dentists, finance for all healthcare professionals. So, guys, this is the 19th episode in this series of 26 episodes that we have planned from January 22 to June 22 for the first half of the year. Of course, the endeavor is to go on further, but not with this series, with a different series. This was intended to be done as a 26 episode series. So I hope you have been enjoying this series and getting something or the other for your betterment or a little change in the management of the finances that you are getting. So, without much ado, let's begin today's session and allow me to share my screen so that I can begin today's proceedings. And in the meantime, I want to check whether I'm live or not. So, allow me to check that as well. Yes, I am live. Yes. My different notification today. So, thank you so much. Yes, I'm live. Let's let me share my screen and allow me to share that. Okay. So, welcome once again to this weekly episode number 19 of 26. Today, again, I'm before you presenting one of the most interesting topics for today's generation who is starting out, or maybe for people who are already started uh, in this journey of finance. So this there is one different question that everyone faces and is not very clear on what to do in life sometimes. Again, as I said, this is a question which pertains to so many of us. Let's find out what it is. So before I begin my presentation, always a big thanks is due to the Lord Almighty who's given me much more than what I deserve. And when it comes to finance, of course, there is no thanks that is less, that is equivalent to Lord Almighty, that is deserving for my dad, who has been instrumental in teaching me the clinical part of finance. So thank you, Dad. Miss you always. So this is my brief CV. You all are aware of it by now. So I hope I have some a little bit of authority to share before you. So this is the topic for today. So should you insure first or invest first? This is the dilemma that almost every youngster faces, or even those who are into the middle road of the practice, 5 years, 6 years, 7 years now, they're starting earning good. They face it. लोग कहते हैं इन्वेस्टमेंट कर लो, कोई कहता है इंश्योरेंस कर लो. सो इंश्योरेंस पहले करें, इन्वेस्टमेंट पहले करें, बड़ी दुविधा है जी. So this is the question before everyone. So let's try to dissect this thing. Which thing is prior? Of course, both are required. There is no doubt about it. But what to choose first? Let's find out. So this is the balance that we have to strike. The insurance is for the protection. The investment is for the growth. They both are inseparable from each other and cannot be, you can say, life in financial discipline cannot be thought about without either of these. So for many people, for a long time, even for me, for a short period of time in the initial phase of my career, insurance and investment were the same things. There were insurance policies coming in those times. Even today, those are coming. More than 80% policies used to be endowment plans or money back plans. So people used to invest. The first question they asked the insurance advisor was, "Agar main bach gaya to?" So you'll get a money back. So the question is not about being happy on survival or being sad on losing your life. That is a different question altogether. What I mean to say by this thought is that the company agents used to present it in a way. This is, it gives you insurance, it gives you guaranteed returns, it gives you bonuses, it gives protection to your family, all in one family, all in one plan. See how good it is. And there were different variants of this. Perennially speaking, the insurance, the premium part has been very high in such plans. You pay a bomb 50,000, 60,000, and all you got was 10 lakhs of insurance, 15 lakhs of insurance, 5 lakhs of insurance. In those days, I'm talking of 15, 20 years back. That was still a very decent amount. But in today's times, 10, 15, 20 lakhs carries no value. So the requirement of investment differs from insurance totally, of course. But remember, both these things are inseparable. Insurance and investment are two of the essential wheels of a vehicle, the front or the back. That is a different debate altogether. But of course, insurance is critical because it helps us to ward off uh, any difficulties. And surely, if God forbid any one of us loses our life and our family is left behind to, we can say, fend for themselves, the insurance does help. Of course, the term insurance I'm talking here. So, but the objective of the investment is to get returns or interest. You can't keep working all your life. You need to invest so that you work for 30 years and then you rest for 30 years, or at least you retire at 30 years, because your efficiency is not going to be the same. And then, of course, the returns are also, even if you keep working, the returns are also not going to be the same. Insurance is the protection, the umbrella for the loved ones of your life. They may not have to fend for themselves in your absence. So, insurance is not meant for financial goals, but as a financial aid for them. So, a right balance in both the, you can say, both the parts of the takdi, as we call it in Punjabi, or the, you can say, weighing scale, is very important. So, what exactly is insurance? Just to brief you a little bit about that, of course, most of you know about it. It is an agreement between an individual and an insurance company, of course, private, sarkari, government, whatever, there might be multiple. They provide protection against certain kinds of losses. Of course, there are insurances available for so many assets: car insurance, home insurance, wealth insurance. There are multiple things. Of course, term insurance, health insurance, I'm not counting even. Those are the important ones. We pay our premium and we get a safety of a certain amount over a certain period of time. So again, as I said, the most commonest ones are the health and the term insurance. In today's times, when the medical costing has crossed the roof, especially in the during, or I would say, the post-COVID world, exactly 2 years plus into post-COVID, and you can say the health cost has gone up considerably. What used to be the cost of a normal operation is almost double, or at least 1.75 times of what it was in the pre-COVID world. Term insurance is like your vehicle insurance. You have an insurance for your vehicle, still you don't want to get your vehicle hit. So, and if your vehicle does not get hit, next year you pay the premium again, but you are awarded maybe a little bit in the form of an NCB, no claim bonus. So nobody says if I have the insurance, I should hit my car or I should hit my vehicle anywhere. So we don't want it to be hit. Similarly, term insurance is like a protection against yourself. It is available at peanuts amount compared to the protection it can accord. But the unfortunate thing is the commission involved in this is too less. That is the reason the insurance agents don't promote it. They promote the 3-in-1, 4-in-1 endowment plans, money back plans. So this is the reason I have so many group members who regularly message me, sir, 50,000 kist aati hai. I said, what is your coverage? Sir, coverage is 10 lakhs. Come on, yaar. 50,000 you're paying for what is the money back thing? मनी बैक थिंग अगर कुछ भी आए तो एवरेज ले दे के 6.5 से 8.5% रिटर्न मिलती थी. अगर पुराना लॉ का प्लान तो मैक्सिमम 8, 8.5 मिलेगी. अब का लॉक है तो मे बी 5.5, 6.5, अपर केस 7%. Even the returns are not fancy, the protection is not a good amount, but still people are fond of 3-in-1, 4-in-1 plans. The time has changed now. Time has considerably changed in the post-COVID world. I can't dare to call it a post-COVID world. I don't fear, you can say, I have the positive feeling that we won't get any fourth, fifth, sixth, seventh wave. We are shut down for now. So I'm just hoping against hope and hoping against, you can say, again, hoping with positivity in this regard. So it is a post-COVID world for me. So the dynamics have changed considerably. It is a world where we need to realize that this is a world where the specialists rule. The term insurance is the specialist for insurance. The equity is the specialist for the investment. Of course, there are fringe players also, there are other options also, there are all rounders also. But the money back or the endowment plans in today's time, they don't even fit as, you can say, as the 12th man also. Maybe for short term goals where you have a huge amount of things already done, a money back plan may be a decent option. But for a normal middle class or a normal, even a upper middle class, I don't think the endowment plan even fits into the squad of 12 if we talk about a cricket team. So it is not even, at least in my top 12 of you can say, any protection. Neither does it come in the insurance category, neither does it come, nor does it come in the investment category. The problem is what we have been taught is to keep all these together so that you get the benefit of best of the both the worlds. This theory does not apply anymore. Insurance and investment are two separate things, and we need to respect that, and we need to know that they should not be mixed. They are like brandy and whiskey. If you mix both of them, the morning you're going to have a lot of vomiting and hangover in today's world. Of course, in both the cases, in term insurance or the normal endowment plan, you still pay a premium. So what is investing? Investing is, again, putting your money to buy stocks, bonds, equity, shares, and endless number of items. And these days, the craziest thing recently, which has gained favor in the past 1.5 year, is the cryptocurrency. Of course, the cryptocurrency is also showing its true color these days. But again, there are advantages and disadvantages both of going through various vehicles. But yes, as I said, the specialist will still remain the equity. Equity means the stock or the mutual funds which give you a decent amount of return, which can beat your inflation, and of course help you ward off your style of living or cost of living and make things easier for you. So just saving your money at 2.5, 2.75, even some banks are offering 2.25% saving interest is not going to get you rich. You have to invest to stay ahead of inflation. I was reading today evening only, the government figures are right now, today evening, 7.79% for inflation. Inflation used to be around 4, 5. Suddenly it has shot up. So suddenly the banks have been all over the world have been saying enough is enough. So they have tried to snatch away the excess of liquidity in the market. Hence the repo rates were changed, and the courtesy, of course, stock market is also bearing the brunt of it. But then some good things have to come to end one day. What started off as a fear in the COVID industry in March and April 2020, then went on to recover in the next 3-4 months from to almost near pre-COVID levels in August, going up to insane heights till July 2021. And October 2021, it reached the pinnacle. But after that, it has been a choppy market correcting itself off and on. Of course, we have been witnessing this ever since the RBI announced the correction of the repo rate. In the past 10 days or so, almost you can say the market has corrected by almost 7 to 8 or 7 to 9%. So again, you have to invest your money in a suitable instrument. And of course, we need to understand that FDs are no longer the suitable instrument, which has been the favorite. Now, if you try to mix investment and insurance, the common area, again, traditional plans like endowment and money back plans. As I said, till 15 years back, 2005, 6, 7, I'm talking, 80% of the insurance policies were endowment and money back plans. And they were flavored, colored, you can say merged, whatever, different, again, the same wine in a different bottle. The old wine was served in the different bottle. It was not even an old wine. The old wine is still better, I would say. But it was mixed in a different problem. The problem, as I said, premium is insanely high. The returns are pathetic, 5.5 to 7.5. Rare case, agar bahut purani hai to 8%. And the insurance cover is even pathetic, 5 lakhs, 10 lakhs, 15 lakhs, which carries no value in today's times. So the brandy and the vodka, or the brandy and the whiskey don't need to be mixed. So the big question once again, should you insure first or invest first? You have to think hard, and so that kahin aapka dimag burst na kar jaye like this cartoon. But yes, in this modern era of uncertainty, we need to be protected first. But yes, on the other side, the inflation is making things difficult for us. We need to be invested also because we have to save money for the rainy days also. So question again is, should you insure or invest first? So I would say we need to protect ourselves first, because protection is the first thing, and unprecedented developments of the factors which are not in our hand. The first of those is life. So the life is in the Lord Almighty's hands. We don't know how many hours, how many days, how many years, how many weeks, how many months, how many years are we left with. So protecting our family, if we are the head of our nuclear family, if we are the sole single earning member of the family, we need to protect ourselves fully. With a term insurance, you can get a very, you can say, very high sum insured for the payment of a normal annual premium. A 30-year non-smoker male can get a 1 CR coverage in roughly about 20,000 rupees or so, which is almost nothing. Which is almost nothing. So it gives you all the more reason to avail insurance before investing. So my takeaway would be to avail insurance before investing, of course, but be protected first, and then once protected, you can go on investing. Remember, the objectives of both are different. Investment is supposed to give us returns, but then those are to achieve a certain kind of financial goals. Financial goals vary करते हैं हर इंसान से. Short term, medium term, long term. Somebody just graduated may have two immediate goals. You can say marrying or opening up his own clinic. Someone who's opened up his clinic may have a, you can say, and married as well, may have short-term goals as bringing a child into the family, or maybe a medium-term goal as an expansion of the clinic. Someone who's into the middle road may have a bigger role of bringing the second child into the family, if at all, or maybe going upscaling or upskilling and upscaling the business, both ways. So the goals will keep on staying always. No person in this world is without the goals. But then to achieve those goals, you need investment options. The insurance safeguards you if at all any mishap is about to happen. Life insurance, term insurance, as I say, these all can give you, your family, the kind of protection they want. So which is more, both are equally important, of course, but the priority wise, insurance should be the first one before the investment, as per me. So insurance before investment is always a good move, but again, it does not mean that one should delay investing. जितना जल्दी एंटर करेंगे यंग एज में, उतना आप you will reap the power of compounding, you will unleash the power of compounding in your later years. And trust me, there is no bigger enjoyment in life to see your own money growing your own money, and you practically laughing it off and wearing it off, and just enjoying the proceedings without having to put anything. But to reach that stage, you need to have a lot of dedication and discipline of so many things in life. And trust me, one of those things is going to be your long term staying invested. And it does not matter when you enter, the time spent with your money in the market or wherever it is going to make a difference altogether. So if you are a risk free investor, of course, these things are not in my copybook of investment. FDs and RDs, they are no longer my choice of products, even since the past 6-7 years. The government saving scheme, the bonds, and the debt mutual funds, of course, these are a risk averse, for the risk averse investors who fear putting their money in the market. So if you're a slightly aggressive investor, you can invest in hybrid funds or maybe equity linked investment. You can say ELSS or the pure equity mutual funds. The hybrid funds or the NPS is the balanced kind of an investment. But if you are ready to take even bigger risk, the time is right now. The market having corrected 7 to 9% and expected to go a little more down. The Nifty might be touching or testing 15,000, 15,200 levels. It is 15,800 right now. What I expect is it might bottom out at 15,200 or max 15,000. It should not go beyond that. If you do that, this is a golden opportunity for you to buy and invest in direct mutual funds, or if you want, in direct stocks. If you can monitor your portfolio, surely in stock. So regardless of the investment option you choose, You have to understand your goals are being met, objectives are being served, but they should be in sync with your risk tolerance level. कितना आपका appetite है, कितना आप risk ले सकते हैं. But the golden rule always stays the same. Always keep specialists for specialist products. Insurance and investment are supposed to be separate, and they should be separate only. So again, insurance does not always equate to investments. You have to remember this equation. So the carry home gyan for today, as usual, insuring and investing are two of the most important components of your financial plan, should not be mixed, but you must sure before you start investing, you should have an insurance first. You can delay, you should not delay your investments also, because inflation will then start eating into your savings and you will be living on a borrowed life. So the investing also should go hand in hand. But remember, investments are liquid than insurance. It is because insurance is linked to a clause like a death. But investors can redeem whenever they like, whenever they want. Very rarely, some of the investments come with a shorter lock-in period, maximum 3 years, 5 years. But otherwise, they are liquid, highly liquid. But insurance is not liquid. But that does not mean that insurance is negated. The bottom line still remains insurance, investment, both to be done. But insurance is the first priority. But investment not lagging behind, it also to be done. So the 5 must have insurance. Plus, since insurance is the winner today, so the 5 must have insurance plans. Life insurance, also known as term insurance, health insurance, car insurance, home insurance, and especially for people like us, the dentist, disability insurance. So thank you so much for a patient hearing. I hope I was able to add some value to your life today. So this is my WhatsApp community where you all have been watching these sessions. I have been putting out various things as well, education based in my WhatsApp group. These are totally advertisement free groups. If you want to join, the 6th group is on and it's about to be filled. Then after that, there will be no more groups because I can handle only at the most 6 groups. So this is my YouTube channel. If you are yet not subscribed to it, go to YouTube, search Dr. Bhavdeep Ahuja. Else you can say, use my tagline DR Bhavdeep, which is my common you can say search medium on any kind of social media. Clubhouse, Instagram, Facebook, anywhere you can search me with Dr. Bhavdeep, DR Bhavdeep. I'll be there everywhere. So do send me your feedback to this session. Bouquets and brickbats both would be welcome in equal measure. Wherever you're watching this session, YouTube, Facebook page, on my WhatsApp community, or wherever it is being streamed, please do send me your feedback. So thank you so much once again. And I stop my share for the questions, or you can say acknowledging the visitors on my page where the session is happening. Okay. Hello, Dr. Ramchandra sir. Hello, Dr. Sonia. Hello, Dr. Rajendra Desai. Hello, Dr. Vinita Chug ma'am. Hello, Raghu. Hello, Dr. Dasari. Hello, Dr. Manoj. Dr. Rajendra Desai says only term plan, but they are not promoted. Yes, absolutely, because the commissions are very less in that regard. So, hello, Dr. Nimish Likhani. Hello, Gautam Saigal ji. Hello, Dr. Vrinda. Hello, Dr. Prabhu PS. Hello, Dr. Jeena Kalon. Hello, Maninderjeet. So thank you, Dr. Ramchandra. Thank you, Dr. Sonia ma'am. Hello, Dr. Rishikesh Chillu. So I hope the session was able to put some clarity on what exactly you need to do in decisions pertaining to insurance and investment. And I believe that all of you must be having some amount of insurance as such. So it is always advisable to have an insurance. I have full series done on insurance in lockdown. There are 3 parts of health insurance and the general insurance, and linked with the critical illness part. And of course, the investments I've done in various different, you can say, lifespans, age of 30s, 40s, 50s. What should you invest in those ages? I've done investments also, financial investment journey, 4 sessions on that. So yes, you can watch those. All of that is on YouTube, my channel. This video also, which you're watching live right now, will go to YouTube tomorrow. And yes, the endeavor is to keep the channel running with small little updates, so in whatever way I can. So Dr. Hrishikesh asks, isn't it good to opt for joint term plan? A term plan is usually a singular one only, usually. But we always should have a term plan. That is the primary thing. Joint or singular comes later. The term insurance is very important because ultimately, if one is the single earning member of the family, or having huge loans on his head, if something happens to him, he leaves large amount of loans behind, the family will be in a mess. So it is always better that we go in for a term plan. That is more important. So you take no Bajaj term plan. I didn't get your question. Anyways, thank you so much, guys, for watching this session. I'll be back next Monday with episode number 20 of the Miraculous Mondays on practice management and medical legal. And again, the next episode of Thunder Thursdays on next Thursday. So stay tuned. Bye bye. Take care. Have a great weekend ahead.